Good afternoon, students. Today we are into the second session of paper 5 of Intermediate Advanced Accounting. And today I am having with me my faculty CA Seema Gupta and CA Asha Verma. Yesterday they had taken you through the first part of the journey of this paper 5. Now they are going to take you through to the next part also. Yesterday, they have covered with you the different accounting standards, that is namely 4, accounting standard 4, accounting standard 5, 7, 9, 14, 17, and 18. So they have covered these sections with you. In case you are having any queries, and the way I think the yesterday's session was, the feedback which I have got is very interesting, that all of you have really participated in this particular session and you have really enjoyed, and you have really also come to know as to what type of mistake you are actually making, and accordingly the faculty has guided you as to how to take care of different aspects of the standards. So I hope the today's session also will be very fruitful. And yesterday also they had apprised you about, they had given you the tips also about the exams, as to how to face the exams, how really to make yourself ready for the exam, how to rather prepare yourself and study the standards so that you are able to apply them during exam time. Today they are going to cover with you the different standards, that is accounting standard 19, 20, 22, 24, 26 and 29 they are going to cover, and also they'll be covering the other topics besides these standards also. So students, while you are reading this paper, while you are preparing for your exam, kindly ensure that you read the question very carefully and attempt the answer on the paper sheet which you are using, or any booklet you are using, or register you are using. Don't see the answer beforehand, because if you see the answer beforehand, you will be rather, you will not be able to then attempt the question during exam time. So your concepts should be very clear. You should know which step will come when different adjustments are to be made, because you must understand that you are marked for the different steps which you have rather you have done the answer for, like the answer which you are doing and the steps you have carried out in the sheet is going to give you marks. So just calculation you have done it in the calculator and written the answer is not going to help you. You need to rather give the calculations, the steps properly in the exam sheet. Don't do it as say kind of a rough sheet. Make it, it should form part of your answer only. So be very careful when you are attempting the answers. Be very careful when there is a doubt in your mind when you are reading the question. Like yesterday also I had told you, if you are reading the question and if you feel there is some information you feel is not there and you do not know how to start, so make that assumption in the answer. Don't make the assumption in your mind. Yes, you need to make the assumption in your mind first in your mind, and then you need to list it out in the answer sheet and then attempt the answer, and accordingly you will be marked. So now I am going to request our faculty CA Seema and CA Asha to carry forward what they have, where they had left yesterday, and tell you more about the accounting standards and the other topics. Thank you. Thank you, students, and all the best. So, Seema and Asha, kindly carry forward what you have, where you had left yesterday, and apprise the students as to how they need to attempt the exams. Thank you very much. Thank you.
Good afternoon, students. Welcome to the second series of our session on Paper 5 Advanced Accounting. We will continue the discussion from the AS where we left yesterday. We were discussing Accounting Standard 19 or Leases yesterday. I would request you to make the session, today's session also interactive in the way we were discussing yesterday. The queries were posted and you were answering the queries along with us, so that the session was quite interactive. So we want the same thing to continue in today's session also. So where we left yesterday was accounting standard 19, and the standard is a typical one because we have to identify the type of lease in the particular question given in the examination, and then only the accounting treatment required we can answer. So now coming back to the provisions of AS 19, where we have to identify what type of the lease is it. First of all, we have to read the question, we have to understand the requirement of the question, and we have to classify the lease as to whether it is operating or finance lease, and then only we can proceed for the accounting treatment in the books of lessor as well as in the books of lessee. So let's start the discussion.
Good afternoon, student. Now we are going to start discussion on AS 19. Due to time constraint, we are trying to cover the important concepts or important provisions which are very helpful for you for this examination of this AS 19. The main provision, the main concept of the AS 19 is that this AS is related to lease. In lease, we have two parties, the lessor and the lessee. Who is lessor and who is lessee? Lessor is that person who is ready to convey his right to use the asset to the lessor in the basis of the consideration which he received from the lessor. So we have two parties.
That consideration is basically lease rent. It is called lease rent. And the lessor is the one who gives the asset on lease to another party. Only the right to use the asset is being transferred and not the ownership. So remember this point, that the ownership in the asset is still with the lessor. It is not being transferred to the lessee. Only the right to use the asset is being transferred to the lessee for a consideration which will be paid on yearly basis. Generally, it is paid on yearly basis. It is called lease rent.
So lessor decided that he will give right to use. What he is conveying? He is conveying right to use of the asset to lessee for a period, for a year, and on the basis of this, the lessee give him some consideration, not in kind, he will give him consideration. This consideration is known as the lease rent. And on the basis of this AS 19 provides a provision how you will treat. The AS says that at the time when you going in a contract which is related to the lease, what will do? When to recognize, what to recognize, and what to do next. The A says, what is the time when you are going to recognize the lease? It says at the time of the inception. At the time of the inception, you have to recognize the lease.
Inception means beginning of the lease.
That means beginning of the lease. And what is? What to recognize? What are you going to recognize? You are going to recognize the asset, the liability, and the expense. You have to recognize it. And what next? Next is related to its finance cost and its depreciation. So we have two parties. First of all, we have an asset for which we are going its right to the lessee. The main point of this AS is 19. You have to decide whether this is related to the finance lease or the operating lease.
That means in the question, first of all, you have to identify, you have to see the indications given in the question, the conditions given in the question, and you have to identify whether the given lease is operating or finance, and then only the entire answer will get changed. If it's a finance lease, the answer will be substantially different from the answer if it's a operating lease. So first of all, the classification of lease is very important
because the provision provides that if it is a finance lease, what will be the provision? In case of the operating lease, what will be the provision? So you have to first check whether this lease is related to the finance lease and or the operating lease. In case you have to check the finance lease, there are the certain conditions which you have to satisfy. First of all, you have to check whether the lease transfer the ownership of the assets. The main point is that in case of the lease, whether the ownership is transferred to the lessee. At what time it has to be transferred? At the time of the end of the lease. For example, if I have an asset, its useful life is 10 years. So at end of the 10th year, whether the ownership is going to transfer to lessee or not. This is the first point. The second is that lessee has the option to purchase the asset at a price which is expected to be sufficiently lower than the fair value. At the date of option becomes exercisable such that at the inception of the lease, it is necessarily certain that the option will be exercised. That means at the end of the 10th year, lessee has an option that he can purchase the asset or not. But the price it should be lower. Lower of what? Lower of the fair value. The fair value at the inception, that means at the beginning of the lease.
So that means
the
there is
first
a
rate-
time gap. There is a time gap at the inception of the lease. You have to compute the fair value. You have to check the fair value and the price which is taking, which on which basis the property in the lease is being transferred. That is at the end of the lease term.
So 2 points here. First of all, the transfer of the ownership. The second one is the option to purchase. Now third one is that the lease term. Lease term is for the major part of the economic life of the asset, even if the title is not transferred. That means if you have an asset which is having the useful life of the 10 years, then its lease term should be near to 10 years. It cannot be the 5 year or the 6 year. It should be nearby the 10 years. Only then we can say that this lease is related to the finance lease.
It means approximately it should cover the majority
part
of the
economic life.
majority part of the economic life of the asset. Lease term should cover at least substantial part of the economic life of the asset.
The next one is at the inception. That means beginning. At the inception of the lease, the present value of the minimum lease payments amounts to at least the substantial of the all fair value of the lease assets. That means at the time of you are going to incept your lease, its present value of the minimum lease payments. जितनी भी उनकी आप रेंटल में देने वाले हो लीज, उनकी प्रेजेंट वैल्यू क्या है आज की डेट में? इट शुड बी एटलीस्ट इक्वल टू द फेयर वैल्यू ऑफ द लीज्ड एसेट्स एट द टाइम. दैट मीन्स फर्स्ट ईयर में जो उनकी फेयर वैल्यू है और उसकी जो लीज रेंटल की प्रेजेंट वैल्यू है वो शुड बी same. The next one is the leased assets is of the specialized nature that only the lessee can use it without major modification. That means the asset which you are using for the lease, should be used after the period as it is without any major modification. So these are the 5 points which you should consider to checking whether the lease is related to the finance lease or the operating lease. Number 1, ownership is transferred. Number 2, option to purchase. Number 3, the lease term should be equal to the major part of economic life. Number 4, the present value of the minimum lease rent, it should be equal to the fair value of the lease rent. And number 5, it should be used as it without any major modification. If all these 5 points or the 5 conditions are satisfied, then we can say this lease is related to the financial lease.
Even if any of the condition is being satisfied, then the lease will become a finance lease. All the condition must not necessarily be fulfilled, but if any of the condition is fulfilled, then it will be called a finance lease.
Otherwise, it will be the operating lease.
Yeah.
So your accounting treatment will depend upon the whether it is a finance lease or the operating lease. First point we have clear that we have the finance lease. Then what will be the accounting treatment? In case of the finance lease, you can see that the asset is at the end is going to be the become the asset of the lessee. So lessee is going to show it is an asset. The lessee will show it is an asset and same as the liability in its balance sheet And in statement of profit and loss, it will show as the finance cost and depreciation cost. But in case of the operating lease, the depreciation and the asset, it will be shown in the books of lessor. The main difference of the finance lease and the operating lease is that in case of the operating lease, the asset is related to the lessor and he will charge the depreciation.
So it's clear to you that in the finance lease, the depreciation will be claimed by the lessee and the asset will also be shown by him. And in the statement of profit and loss, the finance charge with corresponding amount of depreciation of the asset will be shown in his books for the concerned accounting year. Now, Radha, you are saying about AS18. AS18 was very well covered in yesterday's session. Even we took the question where we took 4 entities were involved, and we also asked the students about the whether they are related parties or not, and then we gave the answer, and it was very much satisfactorily answered by majority of the students. We explained the concept also. In the end,
you can also watch our video through the BoS app only or from the Facebook, so it will not be tough for you.
You can watch
this recorded session from the
yesterday's
YouTube.
session is available on YouTube. You can watch it and you can understand. If any query is still left with you, you can mail us at accounting-inter@ici.in. We will suitably reply the query to you.
It says that at the inception of the finance lease, in case of the finance lease, the lessee should recognize the lease. The main difference is the finance lease and operating lease, that who will going to recognize the asset and the depreciation. In case of the finance lease, lessee should recognize the lease as an asset and liability. Such recognition should be an amount equal to the fair value of the leased assets. At the time of the inception, the lessee is going to recognize the lease. At what amount? Amount is equal to the fair value of the leased assets at the inception of the lease. And next one is the lessor should recognize assets given under a finance lease in its balance sheet as a receivables at an amount equal to net investment in the asset.
So instead of the value of the asset, the net investment in the lease will be shown in the books of the lessor as an asset.
And what is going to be done accounting treatment in the books of the lessor? In the operating lease? Lease payment under the operating lease. Now we are in the operating lease. In operating lease, it should be recognized as an expense in the statement of profit and loss account on a SLM basis. In generally operating lease, it is shown is on the basis of the SLM basis if any other method is not provided. Over the lease term, unless another systematic basis is more representative and on the time pattern basis.
So if in the question you are provided with some other method and it is specifically mentioned that the lessor is charging the finance charge on this particular basis, then only we have to give the accounting treatment accordingly. Otherwise, we have to provide
the SLM basis.
Yeah, straight line basis.
On the SLM basis, you are going to charge it. And the lessor should present an asset given under operating lease in its balance sheet under fixed assets. Now you can see the difference. In the operating lease, the lessor, it's shown fixed assets under balance sheet under the fixed assets. But in case of the finance lease, the lessor is going to show this finance lease balance sheet as a receivable, which is the amount equal to the net investment.
So let us take a very simple question on the basis of which we can show you the accounting treatment for the lease.
So in case of the lease, first of all, you have to read the question thoroughly, carefully, and try to conclude that whether this question is related to the finance lease or it is related to the operating lease, on the basis of which you can give the required accounting treatment. First of all, in this question, the information provided is fair value at the inception of the lease. That means at the starting of the lease, fair value of the asset is 20 lakh. Lease rent is 6,25,000 per annum at the end of the year. Guaranteed residual value 1,25,000. Expected residual value 3,75,000. And implicit interest rate is 15%. And discounting rate for the first, second, third, fourth year is this given. And from the information you can find in the above information, we have given the fair value, residual value, lease rent, and expected residual value. Then what is the useful life of the asset? When useful life will be decided on the basis of the year which is given for the discounting. When question is provided that it is discounted only for the fourth year, that means we can assume the useful life is related to the asset is 4 years. Now, on the basis of the information, we have to calculate the value of the lease liability as per AS 19 and its impact on the balance sheet and statement of profit and loss.
The way of presenting the answer is very important in such type of questions. So you see the pattern of answering the question and how we are providing the answer. First of all, we are defining how we are classifying the lease as finance lease or operating lease, and we are specifically mentioning about the standard. We are specifically mentioning about the language of the standard. If you cannot memorize the language, at least the substance of your treatment should be similar to the one which has been provided by the accounting standard 19.
The main problem is that students know about the provision, they can correlate, but at the time of the attempting the question paper, they are not able to write what to write, how to write, even how to present. So we always advise students, then please see the study material or the suggested answers. It will be very helpful to you. So you can give your presentation in the same manner which we have provided.
You can see the way of answering the question. If you don't want to mention the PAN number, you do not remember the PAN number, do not write it. We do not want that PAN number should always be written there. But the crux of the answer, the crux of the classification, the reason for the classification, that should be definitely mentioned in your answer. Otherwise, the accounting treatment, whatever you are giving, that will not be justified, that will not be substantiated, and you will definitely lose marks.
In this solution, we have provided the para of this AS. The reason we have provided so that student can refer this para and they can read it carefully, so they can find the more clarification, more the concept clarity. You are not required to mention this para of AS 90. This is only for your reference, so you can correlate it from which para of AS we are providing this stanza. According to this para of AS 19, the lessee should recognize the lease. Why lessee is going to recognize the lease? Because it is related to the finance lease. The lessee should recognize the lease as an asset and as a liability at the amount which is equal to lower of fair value of the leased assets at the time of inception and the present value of the minimum lease payment. That means
we can see the present value of the minimum lease payments also. The computation we can see here.
That means we have to calculate present value of the minimum lease payment. What is the minimum lease payment? The information provided, it is the 6,25,000 per annum at the end of the year for the 4 years. But you have to calculate its present value. So how we will calculate it? We will calculate with the help of the discounting rate. For the year 1, 6,25,000 at the rate discounting rate of the 15%. What will be the present value? It will be the 5,43,000 on the basis of the rate discounted rate provided. So same for the 4 years, we will calculate it. And the present value comes out is 18,55,850. So the present value of minimum lease payment is 18,55,850 is less than the fair value at the time of the inception. At the time of inception, the fair value of the asset was given is 20 lakh. Then whichever is lower, 18 lakh is lower. So the lessee would recognize asset and corresponding liability at the amount of 18,55,850.
So out of the two amounts, we will have to see which amount is
lessee will check. It has 20 lakh. This is the fair value at the time of inception. Okay. And it has calculated present value. Present value of minimum lease payment, which is 18,55,850. Then whichever is lower, this is lower. So in the books of the lessee, he will recognize it is an asset along with same as an liability.
Let's ask the question to the students that you have seen the circumstances, you have seen the scenario which is given to us in the question. Now you identify whether it's a finance lease or it's an operating lease. Now this question is for discussion and you will give us the answer, then only we will make the justification for the same.
We can check it.
Any percentage is Hiral is asking, any percentage is provided by the accounting standard for major part and for present value. No percentage is being described by AS 19, but we have to apply our judgmental skills and we have to decide what is actually substantial. So maybe 90 or 95% is a substantial which we can consider, but we have to apply our judgmental skills. As such, no percentage is being prescribed.
Muhammad is asking, ma'am, is the ICI study material is enough to clear the exam?
There are many questions in our ICI study material. First of all, if you see from the accounting standards perspective only, each and every accounting standard covered in the curriculum has been explained in a very detailed manner, in a very simple language for better understanding, so that you can clear your concepts and apply the same while solving the practical problems based on the application of the same accounting standard. There are plenty of questions given in our test your knowledge section also, along with the illustrations given in between the chapter. Then we have the past examination question papers where we are providing the answers to you. You can solve those question papers, or if you have prepared, you are preparing topic wise, then you can select the questions on that particular topic from that particular RTP or suggested answer, and you can attempt the same and evaluate yourself. Like in the very beginning, Vanda ma'am told you that you just not read the answers, but you have to solve the questions. Like if you just read the answers and then you reproduce the answer in the notebook, or then if you give the answer in the notebook, then the answers will be biased. You will not apply your skills. You will not apply your level of understanding into that. You will not be able to test yourself. So it's always better to first read the concept given in the chapter and then solve the questions on your own. So there are plenty of questions in our RTPs. You can refer 4-5 previous RTPs. You can refer suggested answers to the past examination question papers, and then from 27th we are starting with mock test papers also. So you can plan your studies in such a manner that you complete the syllabus. At least one round of revision can occur before 27th, and while attempting the mock test paper you can attempt the questions in the similar conditions which will be there in the examination. Under stimulated examination conditions, try to solve the question within the prescribed time limit, and you can evaluate your answers with the answers which will be hosted after 48 hours in our knowledge portal. Then you can see those answers and compare, and you can evaluate the areas. You can judge the areas where your knowledge is still not up to the mark, where you still require some more learning. So you can practice those areas more. So I think there is no, as such, there is no need to refer any other book or any other material. If you just
For concept clarity, the ICI material is sufficient for practice. Loads of questions are provided through study material, through RTPs, through suggested, through MTP. So you have lot of materials. The main point is don't gather loads of material with you. You have enough material. Try to sit and calm and read the concept carefully, understand it. If you have any doubt, any problem, you can contact us through mail, through phone. We will try to resolve it. Even we are also trying to do these online classes, so that online you can ask a question from us.
Even in our virtual live classes also, which are happening these days for banking chapter, you can practice the questions along with the faculty. You can go along with the faculty so that you can prepare that topic at least. Now module 3 is going on. We are covering banking chapter and NBFC 7 classes which are held in the morning. So you can continue your revision along with those lectures so that you can at least prepare those topics so wonderfully that you will not need any further revision for the same. So this is all about the your query, Hiral. And Hiral is saying any percentage is being defined. That we have answered. Yesterday we completed accounting standard AS 18 on related party disclosure. So you can refer that.
From the recorded lecture, which are available on the YouTube.
Revati is asking, ma'am, I had attended yesterday's session. I believe we stopped segment reporting. No, we did not stop segment reporting. We completed AS 18 and we solved the question also where there were 4 enterprises. And I remember that question. So there is
Devati,
no...
you can refer the recorded lecture. Na? In case you find any difficulty to understand the concept, you can contact us.
So now we will move to accounting standard 20. In accounting standard 19.
Students are answering. Radhe is saying that it's a finance lease since its fair value covers the majority of the present value of the minimum lease payment. And Sandeep is saying is operating. No, Sandeep, it's not operating. Radhe is right because it's covering the useful life. Its lease term is equal to the which are the points? Lease term should be equal to the useful life and it is covering the majority life of the asset. And the present value of the minimum lease payment is equal to the more or less equal to the fair value at the time of the inception.
And one more thing, we had specified in the very beginning when we were explaining the indications, when we were explaining the conditions, that if any of the condition is satisfied, then also it will become a finance lease. So here the useful life of the asset is 4 years. We are not given any information about the economic life of the asset. So we will assume that the useful life and the is same as a for the period for which the lease is being granted to the lessee. So if the both useful life, it is covering the major portion of the useful life of the of the asset, then it will be definitely a finance lease. So in the referred question, it will be a finance lease. So
most of the students are giving the correct answer.
Yeah, Revati, you are right. Pala Party, you are also right. Sandeep, we have explained the reason and why it is not an operating lease. Hiral is saying it's a finance. Hiral is saying that still some portion is pending in their subjects. So
in some subjects.
Yeah, okay. Will it be completed before 26? Regarding our sessions, we are going to complete by 26. That is the reason we are starting the mock test from 27th. But regarding your revision, if certain topics are still pending with you to revise, then you have to speed up. You have to increase your speed and you have to follow your timetable in such a manner that you complete your entire study, at least first round of revision by that particular date. If 1 or 2 chapter is left, then you can devote time for that particular chapter later, because we are planning to conduct 2 series. So if we do not start the first series from 27th, then we will not be able to complete the second series before your scheduled examination of November 22. So we cannot delay it further. It's advised to you to move fast. So now
moving to the next accounting standard, which is AS 20. It's a very easy topic and very interesting. This AS is related to the earning per share EPS. You have to calculate as per this AS 20. It says the provision relating to the basic earning per share and the diluted earning per share. What is the basic earning per share? Basic earning per share means that on each share, how much profit is to be attributable to the equity shareholders. So the simple formula of the basic earning per share, how much the net profit is available to the equity shareholders, divided by the weighted average number of the equity share which are outstanding at during the period. What basic earning per share say?
You can check the formula. This is clearly given that net profit or loss, whichever is attributable to equity shareholders. So this standard is applicable to companies, because in companies only we have to calculate the earning per share.
Because companies have to show the basic EPS and DPS on the face of the statement of the profit and loss account. So that's why they have to calculate it. What is the diluted earning per share? Diluted earning per share means there is a 2 types of the share. Diluted potential equity shares. it can be dilutive, and or it can be anti-dilutive.
Potential equity shares means the shares which will be issued on conversion of some debentures, or on preference shares are being converted to equity shares, or like this. So they are basically converted during the period. So that is the reason we have to find out the weighted. The concept of weighted gets introduced from this phenomena only, because we cannot divide the entire number of shares, we cannot divide the entire lot of convertible shares from the earnings, total earnings, to get the earning per share, because there we have to find out the weighted average, because there may be a time gap in between.
When the potential equity shares become the dilutive.
Dilutive means what?
But dilutive means when it would reduce the profit and loss, the net profit per share.
It will reduce the net profit or it will increase the net loss.
When it reduces the net profit per share or increase the net loss per share, then these potential equity shares are the dilutive. In case of the dilutive, the basic earning per share is going to be changed as the dilutive earning per share. In that case, we have to adjust the net profit, because what is dilutive? What is the dilutive? Because we have, for example, the companies have issued the convertible debentures. In certain point of time, these debentures are converted into equity share. So which are those equity share which are converted now? They are also have right to receive the net profit. So the basic EPS will going to be changed. That's why we have to calculate the diluted earning per share.
So it means at the mid of the year, if some shares are being issued, so the EPS will get converted, and the number of shares will also get affected due to the change in the number of shares during the period of 6 months.
Due to this dilutive earnings per share, we will adjust our net profit. Net profit according to the preference shares, dividend, or the interest on the debentures. We will adjust this net profit, and we will also adjust this weighted average number of the equity shares on the basis of the converted equity shares. Now we will take a very small illustration so we can understand this concept more clearly. It says that the net profit for the current year is 1 crore. Number of equity shares 50 lakh. Number of 12% convertible debenture.
So it means these debentures will get converted into shares at some
These
point
are the
of time.
potential, है ना? Potential equity shares, and it can be dilutive or it can be anti-dilutive. So we have net profit, equity shares, convertible debentures, and how can we convert it? It says that each debenture is convertible into 10 equity shares. And interest expense for the current year is also provided. It's 12 lakh.
It means 1 lakh debentures into 10. That means 10 lakh shares will be issued.
So how we have to calculate the diluted earning per share. If just we have to calculate the basic EPS, what we will do? How we will calculate it? We will calculate net profit divided by weighted average number of the share. But because we have to calculate the dilutive, then we have to calculate the adjusted net profit. We have the net profit of 1 crore. We will adjust it through the interest expense and its tax relating to it.
30% of rupees 12 lakh will be 3 lakh 60,000. So tax expense will be adjusted. The net impact of the interest expense will be only considered.
And then it will comes to this. We have also adjusted the number of the weighted average number of the equity shares. The debentures we will going to convert 1 lakh debentures will be going to comes the 10 lakh shares. So the number of the equity shares now 50 lakh plus 10 lakh. It becomes 60 lakh.
Now one more thing, in this particular question you are not provided with the date. If it is very clearly mentioned in the question that these debentures are converted at the mid of the year, then we have to compute weighted average, and we have to find out only for that these debentures are applicable only with effect from the mid of the year. But in this case, when we are not given any specific what will we consider? We will consider it as a date of beginning of the year. So that is the reason we are considering complete 10 lakh shares here, because we are considering that these are issued at the beginning of the year only. So this is the main crux of accounting standard 20. It shows you the calculation of earning per share, basic as well as diluted, and it also shows you how to disclose these earnings in the financial statements of the company. So the main part here is the calculation part in this accounting standard. In accounting standard 19, as we were discussing, the major crux was to identify the classification of the lease, to identify the type of the lease. But in this particular question, there is no such identification.
We just have to calculate.
We just have to calculate the basic and diluted earnings per share, and then we have to solve the question as per the information given in the question. So there are plenty of situations where we can have the question related to issue of bonus shares at mid of the year, issue of shares resulting due to the conversion from convertible debentures, or there may be the case of right issue which have been issued during the year. So the weighted average under each case will get differentiated, and the earnings also will be calculated as a adjusted earnings during each and every scenario, during each and every condition. What students generally make mistake in such type of questions is they ignore the timing factor. They do not consider the timing factor when the increase or decrease in shares occur, plus the variation in the profits also sometimes are being ignored. Like in this particular question, the tax portion may be ignored by the students.
Most of the students ignore this tax adjustment in the calculation of the adjusted net profit.
Yeah, they just simply reduce the amount of the debenture interest and they ignore the tax component here. So it would be always better for you to understand the requirement of the question and then only to answer it, to give the accounting treatment. Whatever calculation is being asked in the question, you give only that calculation which is being specifically asked in the question. So there is some queries. Let us take them also side by side. Actually, we are trying to cover one accounting standard, and simultaneously we'll be taking the queries for that particular accounting standard. We want you to go along with us. We want you to solve the questions along with us so that we can answer your queries and your concepts for each and every accounting standard get clear. Rupesh, you are asking to show the answer again. Which answer you want to show again? AS 19 or AS 20?
I think AS 19.
AS 19, just let's show the answer again. What do you want to ask in this particular question, Rupesh? We have shown the answer. Chalo, whatever you want to ask, you can ask later. We will come back to this again. Actually, we are trying to cover as many accounting standards as possible, because in generally the students find mistakes. Generally the students find difficulties in answering the question based on accounting standards. So we would try to focus the concept of the accounting standards more, and so that your all the problematic areas in the accounting standard, your understanding the accounting standards can get sorted, and we can resolve all your issues. So accounting standard 22. It's very important standard. It gives you the brief idea about accounting. First of all, let us understand the background for introduction of this particular accounting standard. Accounting standard 22 is on accounting for taxes on income. As a name itself suggests that it has to prescribe the accounting treatment for taxes on income. As you all know that each and every business entity has to give income tax to the authorities, and for which we have to make the entries in our books for the same. Now
Different
different types of taxes are there, but here we are concentrating on income tax specifically in this particular accounting standard. Now, what is the reason behind this? What is the reason behind introducing this particular accounting standard? You know that there is accounting income and there is taxable income. Accounting income is an income which is being calculated by the assessee, by the entity in its books of accounts. That this is the income or loss as per my books of account, as per my accounting information. Whatever method of depreciation I am charging, whatever expenses I am booking, whatever revenues I am booking. Taxable income may be different from the accounting income, because under tax, the provisions of income tax authorities may provide for some deductions which I have not deducted from my income while arriving at accounting income. They may deduct certain deductions, they may not allow certain deductions which I have taken into consideration. Suppose, let us take a very simple example. Suppose a machinery I have purchased for scientific research. Now, under income tax, 100% depreciation for this particular asset, if allowed in income tax, then 100 rupees, if it is for 100 rupees, total deduction will be given in the first year of itself. In the first year of purchase, the total deduction will be given to the entity. So the income, the taxable income will get reduced by rupees 100, because 100 rupees deduction will be claimed in the very first year itself. But for my accounting income, let us consider the useful life of this particular asset is 10 years. Then I will claim the depreciation for only rupees 10. So under these two situations, my accounting income will be more and my taxable income will be less. The difference will be for 90 rupees, because here we are reducing the entire cost of the machinery in the very first year itself. But here I will book that expense of 100 rupees in 10 years by charging 10 rupees in each year. So basically what I am doing here is, as per tax authority, the amount of tax which I am required to pay now is less as compared to the tax which was calculated on the basis of my accounting income. Got it? So there is creation of, today I have to pay less tax, but in another 10 years, another 9 years rather, including the current year, I will have to pay more tax. So deferred tax liability will be created here, and it will be reversed. It will be reversed during the next accounting years. So now the concept of accounting income is clear to us. That is the income which is being reported in our statement of profit or loss before deducting any of the income tax expense. Taxable income is the amount of income or loss determined in accordance with tax laws based upon which your tax liability is calculated. Based upon which your tax liability is being calculated. What is current tax? Current tax is a tax which is being paid to the authorities, and deferred tax is a tax effect of all timing differences. Like this is a timing difference. This is not a permanent difference. So you can say that two types of differences are there which can be possible between for the reason of difference between accounting income and taxable income. What are those differences? One is timing differences and the other is permanent differences. Permanent differences क्या है? Permanent difference वो है, suppose I have paid some penalty under income tax authorities due to some late payment of taxes. So that payment of tax is never allowed as a deduction under the tax laws, but under my accounting income, while calculating my accounting income, I can show it as an expense. I can show as an expense in my books of accounts. So this is, should I create?
It's not reversible, na?
It is not reversible. So should I create any tax effect of this? Should I consider any tax effect of this? No, we should not consider. It is not creating any deferred tax asset or liability because it is not at all a timing difference. This is a permanent difference which is never going to be reversed. The timing differences are those differences which may arise maybe due to the change in depreciation amount, the variation in the depreciation amount as per my books and the depreciation which is being allowed by the income tax authorities. So those differences which are capable of reversal in one or more accounting year, only those differences are considered to be the timing differences.
आज नहीं तो कल आना ही आना है, वो दोबारा आएंगे ही आएंगे. आज कम है कल ज्यादा है, चाहे अकाउंटिंग में हो चाहे टैक्स में. दैट्स वाई वी क्रिएट द डेफर्ड टैक्स असेट्स एंड लायबिलिटी. बट इन केस ऑफ द परमानेंट डिफरेंस वन टाइम है. दिस इज ओनली वन टाइम एक्सपेंस हो गया ना, उसका आगे फर्दर को रिवर्स होना है ना कुछ और फर्दर आगे कमिंग ईयर्स में इम्पैक्ट आना है. दैट्स वाई वी इग्नोर इट.
क्योंकि वो परमानेंट डिफरेंस है, वो डिफरेंस आपका कभी रिवर्स हो ही नहीं सकता, उसको फ्यूचर में आपको कंसिडर कभी करना ही नहीं है. और डेफर्ड टैक्स क्यों क्रिएट होता है? डेफर्ड टैक्स का कंसेप्ट क्या है? डेफर्ड टैक्स इज ओनली द टैक्स इफेक्ट ऑफ टाइमिंग डिफरेंसेस. Suppose in that particular case where we were referring that there was a difference, 100 we were saying here, and in the 100 we were saying as per tax, the depreciation as per tax, and as per accounts our depreciation was 10 only. So there is a difference of rupees 90. This difference of rupees 90 into, if 30% tax slab is there, then we will create a deferred tax liability for amount of
Because in coming years it is going to be reverse. आप next year में जाएंगे, what will be the impact? It will be reverse ना.
Next year में I will have to pay more tax. I will have to pay more tax because I am saving the tax today. So I will have to pay more tax in comparison to my accounts. I will not have to pay more tax to the authorities, but as compared to my accounts, because next year I will show rupees 10 as depreciation in my books, but under tax laws no depreciation will be allowed for this. So taxable income will be more next year by rupees 10. So I think this is a very simple concept which can be this is a very simple accounting standard. There are no as such complicated issues involving in this particular standard. Only there are 2-3 types of problems which are generally being asked. We have to identify the tax effect of the timing differences in the given scenario. We will also solve a particular problem where we can see what type of the questions can be asked on this particular standard. So what exactly is a deferred tax? Deferred tax is a tax effect of timing differences. In your profit and loss statement, what will you show? You will show current tax as well as deferred tax. You will show current tax, the tax which you are required to pay. Also, you will show the deferred tax, means tax effect of timing differences. In the books, you will, in the balance sheet also, you will have to show as a deferred tax liability or deferred tax asset, and they will be shown separately from the current asset and current liabilities in the balance sheet with specific disclosure that they are deferred tax asset or liability. So now coming to this question, this is a very simple question where we are given that there is depreciation as per accounting records 2 lakh and depreciation as per income tax records is 5 lakhs. So now again the similar type of problem is there where we are having more depreciation allowed under income tax. So what will it create? For 3 lakh, 3 lakh and the tax rate is 50%. So it means 3 lakh 3 lakh into 50%, 1 lakh 50,000. So now the basic difference of deferred tax asset liability or deferred tax asset or deferred tax liability is clear to us now, that if we are right now paying more tax and in comparison to the tax which is being calculated on the basis of the accounting income, because you know the taxation authorities will not calculate tax on the basis of our income, they will calculate tax on the basis of the taxable income as computed according to them. So in this case, the difference of rupees 3 lakh is there, where we are having 50% of rupees 3 lakh. So deferred tax liability will be created for the same amount. And there is some amount which is unabsorbed preliminary expenses as per tax record. It means under accounting income, we are providing this. Under accounting income, we are providing the 30,000 as deduction, but as per tax laws, this deduction is not being allowed by the authorities. So what will happen? It will again be having a deferred tax impact of 30,000 into 50% means 15% will be the deferred tax impact of that. It will be a deferred tax asset and not a liability, because right now we are paying more tax and in the future we will have the saving. So there will be tax saving in the future. So basically what exactly is the amount of my current tax is, current tax plus deferred tax is basically the tax expense or the tax saving. So this question is clear. Now we will go to the another standard, AS 24, discontinuing operations. Under AS 24, AS 24 is about discontinuing operations. As we know, if any particular operation of a business is going to be discontinued, we have to disclose it in our financial statements. The discontinuing operation must be the discontinuation of the business operation may be due to a single plan of action. The plan should be approved and it should be a single plan. So according to AS 24, to qualify as a discontinuing operation, the disposal must be pursuant to a single coordinated plan. It must be pursuant to a single coordinated plan. So if there is gradual phasing out, generally it will not be construed as a discontinuing operation, but there are certain exceptions. There are certain examples where the gradual phasing of a particular operation can also be called as a discontinuing operation. Those specific cases are given in the standard itself. While we will be discussing the problem which we have taken on AS 24, we will elaborate it further. The particular business operation should be distinguished separately, and it should represent a major line of business or geographical area of operations. So now due to some technical hitch, we are taking a break for 2-3 minutes and we will join back. No problem. Welcome back, students. So we were continuing our discussion on AS24, where we were discussing that AS24 has to give the information about any discontinuing operation, and we have to report it in our financial statements. Proper disclosure for any discontinuing operation has to be made. Discontinuing operation, as the name itself suggests, that some business operation or some reportable business segment. You can connect this particular standard with AS 17 also, which we discussed yesterday
Segment
on
reporting.
segment reporting, that any business segment, any business we are going to shut down, we are going to discontinue, that we have to report in the financial statement, that we have to report in the financial statements for, so that we can be transparent in our reporting. If any of the operation we are going to shut off and we are going to start something new in place of that, that information needs to be given to the stakeholders for making their judgment, for making the decisions in the effective manner. So now, what type of questions can be asked in the examination from this particular accounting standard? You may be given the particular situations where you will be given that this is the information. Now you have to identify whether it will be covered by AS24, whether it will be construed as discontinuing operation or not. If yes, then you have to give the proper disclosures. You have to give the proper reporting for that, and what disclosures are required if it's a discontinuing operation. Now, under the accounting standard, any business operation to be called to be justified into the category of discontinuing operation, it must be through a single coordinated plan. The business should be discontinued. The particular business should be discontinued through a single coordinated plan. But they may be gradual. There may be gradual phasing out of a particular business operation, but there are certain parameters which have to be identified. There are certain parameters which have to be identified, and the standard says, however, there should be a single plan, but there are certain cases where the gradual phasing out of any particular business operation can also be considered as a discontinuing operation. But what are those specific circumstances that have to be judged very seriously, that have to be judged in a very careful manner? So this is a question which has already been asked in the examination previously. The question says that the business of this particular entity is manufacture of passenger cars and commercial vehicles. So there are two segments. One is passenger cars and the other one was commercial vehicles. Now the company is working on a strategic plan to shift from passenger car segment to commercial vehicle segment over the coming 5 years. It means the company is planning to discontinue the passenger car segment. The company is planning to discontinue the segment of passenger car. It
One
wants
segment is
to
going to be
discontinued. The business does not want to continue it further. But however, from this fact, we can say it's a discontinuing operation. But the question further states, however, no specific plans have been drawn for the sale of neither the division nor its asset. So AS24 clearly says that there should be a single coordinated plan. There should be single coordinated plan for the discontinuing operation. It means, can it get fit into that category? We will see. But however, in the question we are provided that there is no specific plan of the company, and as part of its plan, it is planned that it will reduce the production of passenger car by 20% annually. So the discontinuation will be in a phased manner. It is not in a one-time bound manner. It is in a phased manner. It also plans to commence another factory for the manufacture of commercial vehicles, and it will transfer its employees in a phased manner to that. It means it will discontinue the manufacture of passenger cars, but it will increase the production of commercial vehicles, but that too in a phased manner. So now, these plans have not yet approved from the board of directors, and the new factory for manufacture of commercial vehicles has not yet started. Because of these two conditions given in this particular question, number one is no specific plans. Keep a note of it. No specific plans of the company was there. the company, it's just the intention of the company. It is just the intention of the company, but there is no specific plans, no approval from the concerned
Second one
authorities.
is, it is not approval from the board.
It is not approved from the concerned authorities. So now we are required to comment that mere gradual phasing out in itself can be considered as discontinuing operation if these two things, if these two conditions were positive, like the approval was done from the board of directors, and number two, the plan was very specific. It was a concrete plan, and it was in a time bound plan that in first year we will discontinue, we will reduce our production by this much percentage, second year we will reduce our production by this much percentage, or by third and fourth year in complete manner, in a phased manner, we will stop the production of passenger cars and we will increase the production of commercial cars. So that plan is missing over here. So it will not be considered to be a discontinuing operation. But otherwise, if these two parameters were fulfilled, they were yes, they were not no, then in that case, the AS24 conditions would be satisfied and it will be considered to be a discontinuing operation. So basically from AS24 only, there are no calculations. There are no calculations involved in this particular question. The only thing is that
you have to check whether it is related to discontinue operation or not, and on the basis of this you have to give the disclosures.
Yeah, you have to identify that whether it will be considered as a discontinuing operation or it will not be considered as a discontinuing operation as per the provisions of AS24. So in this question, you can see the way of answering the question is, you can see the way of answering that mere gradual phasing out is not considered as a discontinuing operation as defined under AS24. And what are the activities? What are the activities that do not necessarily satisfy the criteria, but that might do in combination with other circumstances? So gradual evaluationary phasing out of a product line or class of service. So here it was satisfied. So we could have called it discontinuing even if relatively abruptly several products within an ongoing line of business. Shifting of some production or marketing activities for a particular line of business from one location to another. So this, however, this was not satisfied here, but at least gradual evolutionary phasing of a product line or class of service was satisfied here, and closing of a facility to achieve productivity improvements or other cost, this was also satisfied here. So, however, certain parameters of AS24 to qualify it as a discontinuing operation were satisfied, but it will not be considered as a discontinuing operation because there is no specific plan which has been approved by the board of directors. So first of all, you will have to say that you will have to write the answer in that manner. You see the answer to be presented in what manner? That is very important. First of all, you will write that mere gradual phasing out is not considered as discontinuing operation, but there may be certain circumstances. The combination of either of the conditions may be considered to be called as discontinuing operation, and this particular scenario may fit into that. But why it is not called? That in view of the above, mere gradual phasing out in itself cannot be considered as discontinuing operation. The company's strategic plan has no final approval. That's a point which we were focusing while reading out the question. And the company has no specific time bound activities like shifting of assets and employees. So there is no concrete, there is no time bound plan, there is no time schedule according to which the company is going to operate. So this way you have to write the answer. As you have seen that AS19, the parameter has to be judged and you have to identify what type of lease it is, and you have to give the proper accounting treatment in the books of lessor and lessee. Under AS20, it was more towards calculation of earnings per share or diluted per share, diluted earnings per share. Under AS22, we saw the impact of deferred tax, what are permanent differences, what are timing differences, why the differences originate between the accounting income and taxable income. Then we have accounting standard 24, which says about discontinuing operations. when the operations, when the you have to see the conditions and you have to judge whether a particular discontinuing operation is actually being classified as discontinuing operation as per the definition being given in accounting standard 24. If it does not fit into that particular definition, what are the other conditions, what are the other parameters which we have to see for deciding this. And then only two accounting standards are left now for discussion, AS 26 and AS 29, which are very important because AS 26 gives you the criteria for recognition of intangible assets, when to write, how to recognize it, at what
When to
value
recognize,
at what
at
value
what
to
amount it has to be recognized.
and how to write it off. So we will continue our discussion on AS 26 now.
Now moving to the next AS, which is related to intangible assets.
Mr. Sandeep has answered the previous question. In fact, we forgot to ask them, but he has answered that it's not a discontinuing operation. Very good, Sandeep. Very good. You have correctly answered it, but you have to just not give the answer, but you have to justify in the examination. You have to justify your answer with the substantial reasoning for it, as we have already discussed. And regarding AS 19, I doubt what happened yesterday, because we took it in very elaborate manner. We discussed accounting standard 18 yesterday, and the discussion was quite thorough. We took a practical question also on accounting standard 18, where we described how the parties are to be related and how the parties are to be considered as related. So you are required to please check from yesterday's session and you will definitely understand it. Now coming to accounting standard 26.
Yes, 26, it is related to intangible assets. In intangible assets, this AS says that which item is to be recognized as intangible assets. Because every expense cannot be an intangible assets, for recognition of any item as an intangible asset, it has to satisfy certain criteria. First of all, we have to check whether any item which is going to be checked as the intangible asset, that there is a probable future economic benefits that is attributable to the assets will flow the enterprise. Then that means there should be a future economical benefit. There should be a future economical benefit. And the next one is the cost which is related to an item. It can be measured reliably.
So it means if we are incurring the cost for acquiring any intangible asset, the benefit of which will not accrue for more than one accounting period, then we cannot book it as an intangible asset.
So booking any item as an intangible assets, it has to be satisfy both these conditions. Its cost should be measured reliably and there should be an future economic benefit. Only that we can recognize it as an intangible assets. The AS provides a provision that after checking this criteria, which cost will be the part of the asset and which not be. You have to check which expenses which you have incurred at which time it will be the part of your asset or not. Because when you are going to prepare an intangible assets, now certain expenses you have to be incurred. If these expenses are incurred before these conditions, then it will be not the part of the set. But if it is satisfied this condition, only then it will become your part of the asset. So with the help of this illustration, we will try to cover the provisions of this AF. It will clear you more.
So it means recognition criteria of an intangible asset have to be seen very carefully. If any of the criteria is not satisfied out of the two, then we have to.
It will be treated as an expense. Otherwise, if it is satisfied, then it will be treated as an asset.
We can carry over the value of the book value of the intangible asset as an asset in our book.
So listen the information provided in this illustration very carefully, so we can judge whether this expense can be treated as an expense or it will be treated as an item of the intangible asset.
And stay connected with us. Try to solve the question with us so that you can answer, and we will answer in the last to them.
After this, we will ask questions. There is a Surgical Limited. It is developing a new production process for the surgical equipment. There is a process. It have to check a process of surgical equipment. During the financial year, this 31st March 20, total expenditure incurred on this process was the 67 lakh. That means a process is going on which expenses are going on expenses, and till 31st March 2020, expenses are 67 lakh. The other information is that the production process met the criteria for this recognition. The
So
criteria.
This line is very important for understanding the requirement of the question.
It says that the production process of which this equipment. इस equipment का जो production process था, they met the criteria for recognition as an intangible asset on 1st Jan 2020. Expenditure incurred till date was the 35 lakhs. यानी कि during the year it has expenditure make 67 lakh, लेकिन till 1st Jan 2020, before it no criteria has been satisfied. On 1st January criteria has been met. So what it means?
It clearly gives you the indication that any expenditure before the date when the criteria was met has to be charged
That
to
means
P&L.
This 35 lakh is not related. It will not become the part of the cost of the asset. It will be charged as an expense. And the what AS says, if any expense, if it is charged as an expense in any year, then in the future it will never become the part of the asset. जो एक्सपेंस एक बार एज एन एक्सपेंस चार्ज हो गया किसी भी फाइनेंशियल ईयर में, तो वो आगे कभी भी उस आइटम का, उस इंटेंजिबल एसेट की कॉस्ट का पार्ट नहीं बनेगा. दैट मीन्स आउट ऑफ 67,000, 35 lakh will be the as an expense. Now moving to the next information. Further expenditure incurred on the process for the financial year ending 31st March 2021. This expense is related to 20. For the 2021, how much expenses are there? 105 lakh. And it has been met the criteria on 1st Jan 2020. That means these expenses are related to the intangible assets. As on 31st March 2021, the recoverable amount of techniques embodied in the process is estimated to be the, so that estimated cost which will be incurred is 89 lakh. This include estimate of future cash flows and the inflows. So as per the provision of AS 26, what is the requirement of the question? First of all, it requires the expenditure to be charged to profit and loss for the year ending 31st March 20. For 20, how much expense you will charge? For the year of 20, there is total expenditure of 67 lakh. Up to 1st January 2020, they don't met the criteria. They met the criteria on 1st January 20. Till date, expenses were 35 lakh. So please let us know how much expense you will charge to expenses and how much expenses cost will be the part of the cost of the asset.
First part is very simple. By just reading the question we had answered, but still let's wait for some more answers. Nobody is answering.
So as per the information, it is clearly mentioned that the criteria is met on 1st Jan 2020. So that means the 35 lakh, the expenses up to 1st January 2020, it will be recognized as an expense because the recognition criteria were not met until 31st Jan 2020. So remaining expenses out of 67, it will become the part of the intangible assets.
Yes.
The next requirement of the question is, what will be the carrying amount of the intangible assets on 31st March 20? Now let us know what will be the carrying amount of the asset. What will be the carrying amount of the asset?
$35 lakh as expense, everybody is writing. And Saurabh, Sandeep, Palaparthi, you are absolutely right. 35 lakh is the amount which is to be charged to profit and loss
And
statement.
what will be the carrying amount?
And carrying value, Radha is saying 32 lakh.
So what will be the carrying value? It will be the 32 lakh because 35 lakh is already become the part of the as an expense. Next requirement of the question is expenditure to be charged to P&L for the year ended 2021. Now calculate how much expense you will charge to profit and loss account. For charging, we have already calculated. For 2020, 32 lakh will be the part of the cost of the asset, 35 sorry, and 32 will be the cost of the asset. For calculating the expenditure which will be charged to P&L, carrying amount on 31st March 20 was 32. Expenditure which were incurred on 2021 was 105 lakh.
It means next accounting year.
And because these expenses are incurred after meeting the criteria, then it will become the part of the cost of the asset. So 32 plus 105, 137. It will be the book value. And there is says there is a recoverable amount of the 89. We will reduce it.
So any asset we cannot retain in our books if its value is more than the recoverable amount. So we have to reduce this value, and we have to reduce this value to what extent? To the amount of recoverable. We have to reduce this amount to the amount of recoverable amount. So it means that we have to give the reduction. We have to charge the additional amount. Suppose the book value was 137, but the recoverable amount was 89, and now we have to carry the intangible asset in our books at rupees 89 only. So the difference we will have to write off.
Because for example, we have calculated the value of the cost of the asset is 100 lakh, but market में तो आपको उसके 80 रुपीज ही मिलेगी ना, तो 20 रुपीज जो एक्स्ट्रा आपकी बुक में शो हो रहे हैं, you have to reduce it, and this will become the impairment loss.
However, the standard on impairment of assets is not covered, but only this much you should know.
Simple concept is
This
given
is a
here.
simple concept, and you should know what is the recoverable value, and we cannot retain in our books the carrying value of any of the intangible more than the recoverable amount. So that difference, whatever difference is there, that we have to reduce, and that difference we have to charge to as an expense to statement of profit and loss in the same year itself.
So that part of the cost which we are going to reduce from the asset, it will be going to the part of the profit and loss account, because we have to reduce the amount of our intangible asset cost. Na? The next requirement of question is carrying amount of the intangible assets. Now what will be the carrying amount of intangible asset on 31st March 2021? Can you calculate? Let's see who can calculate.
Impairment loss 48, and carrying amount they are saying 105, 32 plus 105.
Carrying amount, as we have already calculated book value 137. We have impairment loss of the 48. So recoverable amount will become the carrying amount 89.
The total carrying amount is 89 because the recoverable amount was less. So we had to reduce the value of the intangible asset by that amount.
We have calculated 137 book value, but as per the market, we can recover only 89. So we are reducing 48 lakh, which will be we will going to charge in the P&L. Saurabh says 89. Nagraj says 89. Very good.
One student is asking about AS 22. So let us explain it before
minimum alteration
before taking another standard. He is saying that unamortized preliminary expenses in tax, what is the treatment? Suppose we are providing in our accounting income, we are writing off the preliminary expenses, and we are reducing our income. So now we are reducing our income because we are writing off the preliminary expenses in our statement of profit and loss, what will happen? My accounting income will be less than my taxable income. But under tax laws, if there is no provision of writing off preliminary expenses, they will never allow me such deduction. Then that is not a timing difference, but that is a permanent difference. So there is no deferred tax concept which will come into picture for this particular reason, for this particular item, because only for timing differences, when I know that tomorrow the tax authorities will allow me, or tomorrow there will be today their tax authorities are allowing me more, and I am writing off less, but in future there is a certainty that there will be the possibility of reversal of these differences. Only in those cases we will create the deferred tax asset or deferred tax liability, otherwise not. So this is clear. Now this is about writing off preliminary expenses. Under MAT also, certain amount of tax which we are required to pay as a minimum tax. So that also gives rise to difference, and our accounting income may be less, and our taxable the tax computed on the basis of accounting income may be less, and I have to pay more due to the tax authorities calculation of minimum alternate tax. So that gives rise to a difference which may create a deferred tax asset or liability. So now come to AS 29.
AS 29 is very interesting. And last, hope so.
Provisions, contingent assets, and contingent liabilities. The standard is in itself a story type of standard. If you read the standard in a form of a story, you will really like the standard, and you will find the provisions of the standard in such an interesting way that they belong to our day-to-day business operations. You will try to connect them with your day-to-day activities.
You just have to judge on the basis of the scenario whether this item will goes to the provision or the contingent liability. You have to check it, and for checking there is a certain conditions are given on the basis of which you can decide whether it will be a provision or whether it will be a contingent liability. What is a provision? As per the AS, provision means a present obligation as a result of past event, an event which is going in the past but due to which there is a present obligation.
कुछ पहले हुआ हो जिसके कारण आज
आपको ऑब्लिगेशन आ गया. सबसे पहले इस प्रोविजन के जितने भी पॉइंट्स हैं ये सब पॉइंट्स आपको ध्यान से पढ़ने हैं, बिकॉज आपकी जजमेंट ही इसी के ऊपर डिपेंड करेगी. प्रेजेंट ऑब्लिगेशन ऑन द बेसिस ऑफ द पास्ट इवेंट. Read these sentences very carefully and learn them. The second one is, it is probable that an outflow of the resources embodying economic benefits will be required to be settled. That means outflow. Outflow is required to be settled for this obligation. The present obligation which is generated due to the past event. The third one is, reliable estimate can be made for the amount of the obligation. That means जो ऑब्लिगेशन आपकी जनरेट हो रही है, इट शुड बी प्रेजेंट ऑब्लिगेशन होनी चाहिए ड्यू टू पास्ट, एंड इस ऑब्लिगेशन के लिए इट शुड बी आउटफ्लो होना चाहिए. एंड थर्ड वन, आप इसको एस्टिमेट कर सकते हो इसका अमाउंट.
अगर आउटफ्लो ऑफ रिसोर्सेज की हमारे को प्रोबेबिलिटी है, बट अमाउंट हम नहीं कैलकुलेट कर पा रहे, वी कैन नॉट मेक अ रिलायबल एस्टिमेट ऑफ इट, देन हाउ कैन आई मेक प्रोविजन? सो ऑल दीज थ्री कंडीशंस
मैं अपनी बुक्स में दिखाऊंगी क्या?
All these three conditions must be fulfilled. All these three conditions must be fulfilled to be calculated, to be satisfied for the creation of any provision.
This AS can be understand with the help of this simple chart. इस चार्ट के थ्रू आप easily decide कर सकते हो कि whether it will be a provision or a contingent liability. Let's start. First of all, जो भी scenario situation आपको given है, whether there is a present obligation as a result of past. प्रेजेंट ऑब्लिगेशन है, यस, तो हम फर्दर जाएंगे. प्रेजेंट ऑब्लिगेशन कुछ आ ही नहीं रही है तो हमारा यही स्टॉप हो गया. इफ देयर इज अ प्रेजेंट ऑब्लिगेशन, यस, पॉसिबल आउटफ्लो है तो यस फर्दर मूव करेंगे. पॉसिबल आउटफ्लो यहाँ स्टॉप, तो यहीं पे स्टॉप। उसके बाद नेक्स्ट, इफ ड्यू टू पॉसिबल आउटफ्लो वी कैन रिलायबली एस्टिमेट, yes we can reliably estimate the amount. That means we have present obligation, probable outflow and reliable estimate, then we can provide for.
So all these three conditions must be fulfilled. Present obligation must be there, probable outflow must be there, and reliable estimate can be also
आपके पास तीनों चीज है, दैट मीन्स अब आपका प्रोविजन क्रिएट हो सकता है। लेकिन अगर आपके पास प्रेजेंट ऑब्लिगेशन ही नहीं है, दैट मीन्स नो नथिंग, तो आपको कुछ करना ही नहीं है। नो प्रोविजन, नो कॉन्टिजेंट लायबिलिटी। आपके पास प्रेजेंट ऑब्लिगेशन है, देयर आफ्टर देयर इज ए प्रोबेबल आउटफ्लो, प्रोबेबल आउटफ्लो नहीं आ रहा, दैट मीन्स आपकी ऑब्लिगेशन तो है, दैट मीन्स यू हैव टू डिस्क्लोज एज अ कॉन्टिजेंट लायबिलिटी। एक कंडीशन के पूरा होते ही आप किस पे आ गए, कॉन्टिजेंट लायबिलिटी के। अब प्रोबेबल आउटफ्लो आपका था, रिलायबल एस्टिमेट तक पहुंच गए, तो क्या हुआ, प्रोवाइड फॉर कर दिया। इफ देयर इज अ नो रिलायबल एस्टिमेट देन it is also an disclosed and contingent liability.
So it means that if there is a present obligation and there is a probability of any outflow of resources because of that obligation, if we can estimate the amount, then we have to create the provision for the same. If the estimate of the amount cannot be made under reliable circumstances, then what will we do? We can just disclose it as a contingent liability.
हम information तो दे रहे हैं, we have to provide the information to the other
And
users.
if there is very rare chance that there is any probable obligation, the chances are very remote, then we are not supposed to do anything. There is no obligation, there is no estimation possible for the possible outflow, so we are not supposed to do anything. So the three conditions.
So learn these three. These are the three mantras to decide whether it is a provision or is a contingent liability.
Or nothing.
Present obligation due to past event. There must be past event, due to past event होना चाहिए. Number 2, probable outflow. Number 3, reliable estimate. If all conditions are satisfied, only then we can provide for. Otherwise, contingent liability or nothing to do.
So we will take a small example to illustrate it in a better way so that you can understand the provisions of AS 29, what we have explained.
This limit is processing of the finalizing its account for the 31st March. The company's sales tax assessment for the assessment year 1-2 has been completed on 14th Feb. When the assessment has been completed on the 14th Feb with a demand of the 2.74, that means उनके पास 2.76 करोड़ की डिमांड क्रिएट हो चुकी है. The demand has been created on the basis of the sales assessment. The company paid the entire due under protest without prejudice its right for appeal. The company files its appeal before the appellate authority, wherein the grounds of the appeal cover the tax on the additions made in the assessment for order sum of the 2.10. Company has made appeal for the 2.10. Now tell us for which amount we can provide for. Whether it will be a provision, whether it will be a contingent liability or nothing, what we have to do? What we have to do? Is anybody is giving answer? Nagaraj is saying what is the past event? Past event is this na? There is a self-assessment tax. Self-assessment tax किस basis पे हुआ होगा? आपने जो आपने रिटर्न फाइल की है, जो आपने इन्फॉर्मेशन दे दिया, on the basis of which self-assessment is made, and on the basis of this past event, a demand has been created. Now, the information provided that company has appeal for only 2.10. 2.10 की अपील की है, और उसके बाद बाकी जो रिमेनिंग अमाउंट है, फॉर रिमेनिंग अमाउंट 66, what we will do? Since the company is not appealing against the addition of 0.6, it's not appealing, the same should be provided for its account for the year ended 31st March. The amount paid under the protest can be kept under the heading loans and advances and can be disclosed as the contingent liability of the 2.10 crore. The next point is the company has entered into a wages agreement in May whereby the labor union has accepted a revision in wage for June. Agreement was in May and revision has been made from the June 2001 and agreement in 2002. The agreement provided that hike till May 2002 will not be paid. They are not going to pay it to the employees but will be settled them to at the time of retirement. The company agrees to deposit the arrears in government bond by the September 2. Now, what will be the treatment in this case? There was a past event because company has make a wage agreement and revision. It will be goes from the June 2021. But company says it will not pay. It will be paid at the time of the retirement. So what will be the arrears which will be calculated for the period from June to March are required to be provided for in the accounts for the companies for the year ending 31st March 2002. Hope all the provision have been cleared through these classes. If you have any doubt, you can tell us.
I think AS 29 is clear to them. So in AS 22, Rupesh, you are asking about tax holiday. As you know, under tax holiday period, we are not supposed to pay any tax to the government for certain period of time because the incentive which we are getting from the government for this particular tax holiday period. So this impact of deferred tax, because as per accounting, our accounting income, we are having tax liability which is not being supposed to be paid to the tax authorities. So because of this, we are right now we are reducing the liability, and but in future we have to create the liability. This is a tax saving basically for us. So in tax holiday period, that reversal cannot be possible. So during the tax holiday period, it is based on the interpretation of the accounting standard on tax holiday period. So during the tax holiday period, we cannot reverse the effect of this difference. But after the tax holiday period, maybe of 5 years or 6 years, then the possibility is there. Then we can reverse our this tax effect and we can reverse the deferred tax liability. So right now we can come to the certain important aspects of various chapters involved in the curriculum. As you know that this is regarding only accounting standards portion which we have tried to explain to you, because there are number of the cases where the students are not able to attempt the questions on accounting standards in the desired manner, and they are not able to score good marks in this particular segment. The area of accounting standards is very significant because it carries a weightage of around 25 to 30%. So when such a huge weightage is being granted to this particular aspect, and they give the foundation for understanding the concepts of other chapters also, like a amalgamation chapter, and many in various chapters the concept of revenue recognition is being carried out. So to understand the concept of accounting standards, how to write the answers based on the problems of accounting standards is very important to be understood. And I think we have tried to cover those errors also which are generally being made by the students in writing the answers on these particular accounting standards. The way of writing we have explained, and we want you to write the answer in the examination in this manner only, which will give you the maximum marks under this section. Now we will move to section 2, which is company account section, where we will be taking a few certain important aspects of the chapters. First of all, let us take the concept of buyback. Under buyback, as you know, the company is taking back its own shares. What does it mean? It means the company is buying back its own securities. But there are certain provisions of the Companies Act which have to be complied with before taking the decision of buyback. In the question, we are being given that all the conditions have been necessarily fulfilled for buyback. What we are supposed to answer, let's focus on that. Like these are the three conditions. These are the three accounts from where, these are the three sources from where the buyback of securities can be possible.
For buyback, company needs funds. And which funds it can use? It is defined by the Companies Act. It says it can use its free reserve
or securities premium,
or it can also proceeds of the issue from the fresh issue. That means for buybacking its own securities, it needs some fund, and fund can be utilized from its free reserve, from a securities premium account, or from the fresh issue.
And mainly in the questions, what happens that you have to identify that for what amount you have to raise the fresh equity, or for what amount you can utilize from the reserves. Whatever balance you are having in the reserves account, first you utilize that, and then you can ask from the fresh issue of the shares. So these are the sources of the buyback from where you can do the buyback. The provisions of the Companies Act we are not going to discuss in detail because I think these are very theoretical. You can just simply focus on that whatever amount you are taking from free reserves or securities premium for the buyback purpose. It means like if you are going for buyback of 1000 shares, the concept of buyback is clear to us right now. What exactly is buyback? And for rupees 10, it means that for 1 lakh we are doing the buyback. So this much amount of funds we require. Now, if we take 50,000 from our free reserves and securities premium account, then 50,000 we have to make fresh issue of equity shares, because we want our capital structure to remain intact. And whatever amount we are using from free reserves or securities premium, for that amount, we have to transfer the amount to CRR, that is Capital Redemption Reserve. So in the question, you will
Why we transfer the CRR, ma'am? Generally, students ask this question.
To maintain my capital structure intact. To maintain the capital structure intact, because we do not want the capital structure to be disturbed. We want that the same amount should be reflected in the shareholders fund through reserves. So Capital Redemption Reserve is a very restricted reserve. It can be used only for the issue of fully paid bonus shares, not for no other purpose. So CRR is a specific account which has been earmarked for maintaining the capital structure intact, and that is a reason for redemption of preference shares. Also, if you remember in paper 1 curriculum we had covered, we had to transfer whatever amount we were redeeming from our reserves, that amount we had to transfer to Capital Redemption Reserve. So now these resources and this condition is clear to us. This condition I had left blank because I wanted to write here that whatever amount we are using from free reserves or securities premium, that amount we will be transferring to CRR. Got it? So these are the conditions which must be complied for buyback, and there are three conditions which are also to be tested. These are basically the three tests where in the question I am not being provided, like we are not being provided that this much is the buyback which is given. They generally say in the question that the maximum permissible buyback, you have to calculate. In the question, you have to calculate the number of shares which can be bought back. You have to consider the provisions of Companies Act. You have to consider these three tests, and you have to determine the number of shares that can be bought back. जहां पे नंबर ऑफ शेयर्स हमें दिया गया है क्वेश्चन के अंदर, वहां तो कोई प्रॉब्लम नहीं है. जितना नंबर ऑफ शेयर्स है हम उतना बाय बैक करेंगे. हमें क्वेश्चन में लिखा गया होगा कि all the conditions have been fulfilled. We are not supposed to think much on that. But in certain circumstances, we are asked in the question that you have to calculate the number of shares which can be bought back. In that case, there are three tests which we have to apply. First test is resource test. It means the buyback can be possible only for that much amount which is not more than, which is less than or equal to, which is equal or less than 25% of the total paid up capital and free reserves of the company. Free reserves, the definition given in the Companies Act is very clear, that any reserves which can be distributed as dividend, which are free. Only those reserves are free. So CRR is not a free reserve, revaluation reserve, unless and until it has been defined in the category of free, it is also not free reserve. Second test is share outstanding test. The buyback of shares in any financial year must not exceed 25% of its total paid up capital and free reserves. So it is a share outstanding test. That number of shares you can calculate, that should not exceed, that must not exceed 25% of the total paid up capital and free reserves. Free reserves we have already understood. What about debt equity ratio? The ratio of the debt owned by the company, both secured and unsecured, after such buyback is not more than twice the total of its paid up capital and free reserves. So these tests are to be applied in the given question, and whatever the information is being given to us, on that we have to apply the test and we have to calculate the number of shares. So out of these three tests, we have to see, and whatever the minimum number out of all these three tests, that minimum number we can go for buyback. So now considering this question, this is a question which we are taking here for understanding the entries for buyback,
in which share capital is given, reserve and surplus is given, trade payable is given, PPE, non-current investment, trade receivable, cash and cash equivalent.
This is a question from your study material we have taken, so that you can also refer along with us.
In which the company redeemed preference share on 1st April 2001. It also bought back 50 lakh equity share. It is going to bought back 50 lakh equity share of rupees 10 each at 50 rupees per share. That means buyback price is 50 rupees per share.
It means 40 rupees you are paying premium on buyback. Again, one question comes here is, what about premium on buyback? Buyback we have understood, like shares buyback account debited to bank. First of all, we can credit it to shareholders account and then we can pay them. But what should we do for the amount of premium? प्रीमियम अमाउंट जो 40 रुपीज हम पे कर रहे हैं, इसका क्या करना है? जो हम 40 रुपीज का प्रीमियम दे रहे हैं, this we can write it off to securities premium account. If the securities premium account balance is with us, we can directly debit it to that.
And it is given securities premium account is provided 25.
So we will see whether it will fulfill our amount requirement or not. Otherwise, we can use the reserves. We can use the reserves for the said purpose. So now you can see, you have seen the information given in the question. Now we will see the question. We will see the answer. How will we write the entries? In the case of this particular question, it is also given to us that the company bought back 50 lakh equity shares of rupees 10 at rupees 50, for which we have already explained. But one additional information was the company redeemed preference shares on 1st April 2021. So how we will proceed for that? Preference shares were for 75 lakh and
it will redeem 75 lakh.
It will be redeemed because no information is given to us about premium or any premium on preference redemption of preference shares. So we will completely assume that there is no premium. At par, we are redeeming them. Preference share capital account will be debited to preference shareholders and preference shareholders will be to banks. So these two entries are very simple. There is nothing to worry about. Then we have share buyback account to bank. 50 lakh equity shares we are buying. We are going for buyback at rupees 50 per share. So 50 into 50 rupees 25 lakh. Out of which 5 lakh is the nominal value of these shares which are being bought back and 20 lakh is a premium. So now this is very clear to us. There is nothing to worry about. What about the second entry where we will charge the securities premium, where we will debit the securities premium? This is basically the premium which is payable on buyback. So basically in buyback only we have to reverse the entries, like what entries we make at the time of allotment of shares, at the time of raising of fresh equity. So now under buyback, as we are We are going for buyback. We are reversing the equity shares which have already been issued. उसका रिवर्सल करना है और रिवर्सल करने के लिए हमें क्या करना होगा, हमें वो एंट्री रिवर्स करनी होगी. तो इट्स क्वाइट सिंपल, बट द ओनली थिंग इज दैट you have to make the entry very clearly, and you have to give the narration also with the entry. In these type of problems, what mistakes have been observed by the examiners is that the students do not make the narration. They do not give the narration along with the entries, plus a sequence of the entries also to be taken care of. Why I am saying the sequence of the entries? What balance is lying in which account? That can be judged only when the sequence of entries is being taken care of. Whatever transactions you are given in the question, in this question only two things were there, only two aspects were there which were covered, so there is nothing to worry about. But sometimes in the question of buyback, if the question is of 15 marks, there may be numerous transactions, 4-5 transactions. Then you have to see the entry for first transaction, then second transaction, because serial wise in a chronological order you have to attempt the entries. You have to pass the entries in a chronological order as per the information given in the question. So now this is regarding buyback. This phase is clear to us, and this is about revenue reserve to capital redemption reserve. Now the question comes, why I am writing 80 here, because only 20 I should have written the nominal value of the equity shares which are bought back. But the reason is 20 is the premium. 20 was not the amount actually. 20 was the premium, and only 5 was the amount which was to be transferred to
Then
CRR.
why we have transferred 80 to CRR?
75 is due to redemption of preference shares.
shares.
75 is due to redemption of preference shares, so it becomes 75 plus 5. Now this is a very simple question. Maybe for 8 marks or 10 marks the question may be asked. Now the problem is where the students make mistakes in this particular type of question. You can visualize the situation and you can see where the students will make the mistakes. They generally do not pass the entry for this, or if they will pass the entry for this, by the wrong amount they will pass the entry. You have to give the correct amount for each entry. For like if it's a 10 marks question, then for each particular entry, for each particular aspect, the stepwise marks have been allotted, and if you make any of the entry incorrect, you will lose the marks for that. So now this is regarding buyback of shares, and this is a theoretical question. Equity shares with differential rights, so we will not take it up. Let us take the queries if any. Let us discuss internal reconstruction first, and then we will discuss some important entry cases involved in consolidation chapter and what type of the mistakes which are being generally made by the students in the consolidation chapter.
Internal reconstruction is a very simple chapter. You just have to read the information carefully and make adjustment on the basis of the information.
Just hold on.
There are some queries.
Yeah, let us take the queries first, because then we will move to the next chapter. Equity share equity share capital debit 5, premium on buyback 20, and to bank. Achha, they are writing the entry. This is completely right, Sandeep. I think you have prepared this chapter and you know the answer. Securities premium is considered free reserve only for the purpose of buyback of securities. Security premium as such is not a free reserve, but for this particular purpose, for the buyback, security premium can be utilized for the purpose of premium payable on buyback of shares. For the premium payable on buyback of shares, we can utilize this. How to identify the correct purchase consideration method to be used in case of amalgamation. Correct purchase consideration method we discussed yesterday. There are 4 methods: lump sum method, payment method, net asset method, or intrinsic value method, which we discussed yesterday. And the amount of purchase consideration will actually be dependent on the facts given in the question. We have to arrive at the amount of purchase consideration based on the information given in the question. So it is no hard and fast rule that I can say that in this particular question, or you will have to apply payment method or you will have to apply net asset method. It also depends upon the type of the amalgamation which is being identified. If it's a pooling of interest method, then we have to calculate the purchase consideration accordingly. And if it's a purchase method, then also we have to see, because then generally the consideration may be arrived at net asset or payment method will be more applicable in such circumstances. So now we will be moving towards internal reconstruction.
Harish is asking, ma'am, notes to accounts is mandatory while presenting the answer. Very well, because notes to accounts is the part of the schedule 3. As you have to prepare the balance sheet as per the schedule 3 format only.
In all the companies, wherever you are required to present the financial statements of company, whether it's a question of amalgamation, whether it's a question of internal reconstruction, or it's a question of consolidation, maybe in some cases in buyback question also you may be asked.
You have to prepare extract. So in case of extract also you have to prepare the notes of the account, because notes to accounts is a part of balance sheet.
Notes to accounts are part and parcel of the balance sheet. Rather, they are part and parcel of the financial statement, because under statement of profit and loss also notes to accounts are required to be presented. So in each and every question, wherever you are supposed to prepare the balance sheet or statement of profit and loss, then you have to give the proper notes to accounts to that. Moreover, we would also highlight now that in all the answers, wherever the calculations are being required, suppose it's a question of amalgamation or it's a question of consolidation, working notes are very important to be given. Because if you have calculated the amount of minority interest correctly on your calculator and you have written it directly in the balance sheet of the company, then you will not get marks, because we want the working note for the calculation of minority interest. What is the paid up value of the shares? What is the share in pre-acquisition or post-acquisition profits which is being assigned to minority interest? So all that calculations are being required in the answer to fetch marks, and if it is not being given in the answer as part of working note, then definitely you will lose marks. Even if you know the answer, you have given the entire calculations correctly, but it's very important that you have given the proper working notes along with the answers. Working notes carry due weightage and they carry the
marks also.
They carry proper marks. They are being assigned the marks. Manjunath, yes, Manjunath, working notes carry marks, and they have to be properly worked out. They have to be properly carried in our answers to fetch good marks. As you know, the paper of advanced accounting is very scoring. We can get good marks. The syllabus is also in comfortable range if we prepare well, and in a time bound manner. If we start our preparation, then we are able to manage our studies before time, and we can really revise all the concepts in the still now we are having 1.5 month time. If you have not prepared any one particular topic or two topics, you can focus on that particular topic besides brushing up your concepts in the other chapters which you have already prepared. So
as we always suggest students, it is a practical subject, so always read the concept and practice written, because जब तक आप लिखोगे नहीं आपकी प्रैक्टिस नहीं होगी, एंड मोर प्रैक्टिस, मोर क्लैरिटी एंड मोर मार्क्स यू कैन फैच. क्योंकि कहा जा रहा है ना, सक्सेस मेहनत करने वालों पे फिदा हो जाती है. तो मेहनत करो, मेहनत करने के लिए यू शुड यूज योर राइट योर पेन एंड योर नोटबुक.
और एक बात और, अगर आप कैलकुलेटर, जो भी आप कैलकुलेटर एग्जाम में यूज करना चाहें, जो भी कैलकुलेटर आप एग्जाम में यूज करना चाहें, उस पर अपना पहले से ही हाथ सेट कर लें. बिकॉज इफ यू बाय अ न्यू कैलकुलेटर और यू टेक इट टू द एग्जाम, then your hands will not be set, your fingers will not be set on the calculator. So it's always advised to beforehand you purchase some calculator and you set your fingers on that, because otherwise you will definitely, calculations are required in the paper. There may be numerous calculations which may be required in the exam.
So set your fingers on your calculator and use that calculator only.
Otherwise your time will be mere wasted in just doing calculations, because your hands will not be set on the calculator. So it's one of the advice. Can we enter the first journal as 12% preferential capital? 75 to bank, or we can give a combined. No issue, Harish, we can give the combined journal entry also, but we have to mention it in narration that we are paying, we are doing it simultaneously. For banking company chapter, Sandeep, we just covered the classification of investment under held to maturity category yesterday, and the rate was revised. Earlier it was 22%, which SLR holdings, which were supposed to attain in HTM category, but now it was increased to 23%. So that rate we discussed yesterday about SLR and CRR, you are not required to remember the rates. If in the question it will be required to work upon, then this will be provided in the question itself. So you're not required to worry about that, and you're not required to remember that.
Now,
regarding ESOP chapter, I think we can guide them. In ESOP chapter, the entire chapter of accounting for ESOPs, that is chapter 3 given in your study material, module 2, it was revised in the September 2021 edition based on the new guidance note. So we are not covering the entire guidance note, but we will take a small question here. You are required to study the chapter from the September 21 edition only. If you have any earlier edition, we would advise you to not refer that for this particular chapter of accounting for ESOPs, but you are advised to refer the new chapter from the September 2021 edition. So this is regarding ESOPs. So now coming back to, I think Sandeep, you are clear with this query now. That is for banking company, the percentage of statutory reserve not to be remembered now, and whatever information will be required in the question to solve the question on banking company financial statements, they will be provided to you in the question itself.
We will take a small illustration on the topic of the reconstruction, internal reconstruction, so that we can revise the concept. Internal reconstruction is just companies decided to reconstruct its balance sheet. How it can reconstruct? It can reduce its share capital. It can pay off its debentures. It can set off its losses so that the structure of the balance sheet can be changed. That's why it is saying the internal reconstruction.
Generally, the company goes for internal reconstruction scheme
in cases of the losses.
In case of the accumulated losses, to basically to write off those losses, the entire structure of the reconstruction is being proposed and it is being approved, and accordingly the accounting entries we are supposed to.
So you just have to pass the accounting entries and prepare the balance sheet on the basis of the information provided in the question. If the company says company is decided to write off the goodwill or the profit and loss, then you have to pass the journal entries for the writing of the any goodwill, any profit and loss. And companies decided to pay off the debentures, then you have to pass the entries related to the paying of the debentures or trade payables. If any discount is received, then you have to set off accordingly. So basically it is just you have to pass the entries on the basis of the information, and then accordingly you have to prepare the balance sheet in the schedule 3 format along with the notes to accounts.
And balance sheet, in the balance sheet, the figures will be the reduced figures.
Will be the revised.
The revised.
It will be the revised because share capital will be reduced, your debentures can be reduced, your fixed assets amount, your fixed
the value
intangible
of fixed
assets can be changed, because all the information will be provided in the in the question. You have to change the figures accordingly. This question says the shareholders to receive in lieu of the present holding of the 1 lakh shares of rupees 10 each following. Now the company, what will he have decided? It has approved. It should be approved. Any scheme of the reconstruction, it should be approved. And this approved scheme says that the shareholder will receive for holding of the 1 lakh. What will he receive? He will receive new fully paid shares of rupees 10 each equity shares equal to 3/5 of their holding. Their holding was 1 lakh, and equal to the 3/5 holding of their holding, they will receive equity share of rupees 10 each. Further, what will they receive? They will receive 10% preference share fully paid to extent of 1/5 of the above new equity shares. That means on the basis of these new equity shares, they will receive the preference shares.
First of all, you can calculate the new paid up shares, the new equity shares which will be issued. So what will be the calculation of those equity shares? You can just answer us. It's a very simple calculation. Please go for it.
You have to just calculate on the basis of the information. It is very simple.
1 lakh into 3 by 5. These are the new shares which will be issued.
On the basis of this, you have to calculate preference shares.
It means 60,000 equity shares will be issued, and 1/5 of the above new equity shares, the preference shares will be issued. It means 60,000 divided by 5. It means 12,000 preference shares will be issued.
And 40,000 8% debentures will be issued.
This is given to us, so no need of calculating it further.
An issue of rupees 1 lakh, 10% first debenture was made and allotted. Payment for the same being received in cash.
This is a fresh issue of debentures. So there is no, as such, there is no problem. We can just pass the entry for raising of debentures.
And there is a goodwill which was stood in their balance sheet. They decided they will write off completely. The amount is given. You have just to write off the amount of goodwill. The plant and machinery which stood at 2 lakh was written down to 1,50,000. That means they are reducing.
The carrying value of plant and machinery.
50,000 is going to be reduced. Now what will we do? And next information is freehold property which stood at 1,50,000 was written down by 50,000. That means you have to reduce it by 50,000. You have to reduce it. What general entry will you pass?
So now the freehold property will stand at rupees 1 lakh. 1,50,000 less 50,000.
Less 50,000. Now new value will be the 1 lakh. As per the information, equity shareholder which was 10 lakh, what will they receive? They receive equity share capital which was 3/5, that means 6 lakh. 10% preference share capital which was 1/5 of
6 lakh.
6 lakh, that means 1,20,000. 8% debenture, 40,000 amount is already provided, and the difference will be goes to the capital reduction account.
In fact, the nomenclature of the equity share capital account has also to be mentioned here, because the rupees nomenclature, the face value of the share is same. So that is why we have written old here. Otherwise, because this is being reversed, this is being cancelled, and the new equity is being issued for rupees 10 each. So because the earlier shares were also of rupees 10, so that is why the nomenclature has been described as old. To differentiate,
so no confusion will be there.
To differentiate that it is the old equity shares which are being cancelled.
Sandeep has calculated 60,000. Nagaraj has calculated 60,000. Very good. Now moving to the next one was fresh issue of debentures. So bank account debit to 10% of debentures, 1 lakh. Now company has decided goodwill will be write off. Amount was given 140 lakh to goodwill account. It will be write off. Plant and machinery account will be reduced to 50,000 and freehold property will be reduced to 50,000. The balance of this will be goes to capital reduction account. So it is a very simple question. All the questions which are based on the internal reconstructions are very simple. You have to just read the information carefully and pass the entries and prepare the journal balance sheet.
In this question, only the entries were required. So only the entries have been given. Otherwise, the balance sheet also is required to be prepared. If the balance sheet is also required to be prepared, in that case, what will happen? We will carry the all assets and liabilities at the revised value. And
now the plant and machinery revised value will be what?
You can see the earlier value and the reduction.
Earlier value was 2 lakh and it was written down to 1,50,000. That means in balance sheet it will be shown at 150.
Revised value.
And freehold property it will be shown at 1 lakh. Goodwill is write off, so no amount of goodwill will be shown. Fresh issue of debenture of 40,000 will be shown in the balance sheet. 10% preference shares 1,20,000 and 6 lakhs equity share will be shown in the balance sheet.
So it means whatever new equity shares are being issued or new preference shares are being issued, they are definitely to be shown in the balance sheet. But all the old shares which have already been cancelled, they will not be reflected in the revised balance sheet of the company, and the word reconstituted will be generally considered. Reconstructed, reconstituted will be shown as a heading of the balance sheet, that the reconstructed balance sheet of the company, balance sheet of A and company, so and so reconstructed. So that is the case. And generally the reconstruction question can be asked either for 5 marks like this. This was a small question, or it may be a full-fledged question based on 15 marks. There may be so many adjustments, like in this question only 4 adjustments were there. In a particular question in the examination, you may be provided 9-10 adjustments. You have to pass the entries accordingly based on the adjustment, based on the information given in the question, and then you have to draft the balance sheet accordingly based on the revised values. Then we come to the very important chapter, consolidated financial statements. Under consolidation, we are supposed to focus on the preparation of consolidated balance sheet and consolidated statement of profit and loss. Exactly what is the need of consolidation? When we have the subsidiary, then the company which is having the subsidiary is required to prepare the consolidated financial statements to reflect the position of the subsidiary in its financial statements. As you know that any company who is having the stake of 51%, more than 50%, 51% or any more percent is there, then the company is called consolidated, and the other company of whom the stake is there, that will be called the subsidiary. So these are the, without going through the theoretical aspects of the chapter, we will focus on the practical aspects and we will try to solve the practical problem. We will also throw light on the crucial aspects involved in the question. In consolidation question, what is most important? Most important aspect is the calculation of cost of control or capital reserve. Now the question comes, what is cost of control? Cost of control is your cost of investment. Suppose you are investing through purchase of 10,000 equity shares in B Limited at rupees 10. So it means 1 lakh is the cost of investment. In lieu of it, what you are getting in the subsidiary? You are getting the face value of shares 1 lakh. Suppose the purchase price I am changing to 1,50,000. For 1,50,000 I am buying 10,000 shares. The par value of the share was rupees 10. So now the face value of shares is rupees 1 lakh, and on the date when I bought the investment in the subsidiary company 1/1/2022, on this particular date, the profit and loss account balance and general reserve balance of the subsidiary company was 50,000 in total. So first of all, I have to see subsidiary company में मेरा कितना stake है. Total capital of subsidiary I have to see. Suppose the total capital of the subsidiary is 15,000 shares. What does it mean? It means I am holding for 10,000 shares out of 15,000. The percentage of my holding is 2/3. The percentage of my holding in subsidiary is 2/3. So now the pre-acquisition profit share will be computed for me as a holding company. 50,000 into 2/3. Whatever amount it will come. For simple calculation, let us take it as 10,000 divided by 12,000. Then it will be 5/6. Then also it will not be divisible. Let us take 80% I have invested. For 80% shares, this is the cost. So 50,000 into 80%. If I had purchased 80% shares of subsidiary, then 40,000 is a share of my pre-acquisition profit. And I had paid rupees 1,50,000, in lieu of which I am getting 1 lakh face value of shares and plus 40,000 as a pre-acquisition profit. So it means 10,000 I have paid more, which is cost of control. So now we can consider the question also. Ash Limited acquires 70% equity shares of Ash Limited on 1st January 20X1. On that date, paid up capital of Ash Limited was 10,000 equity shares or rupees 10 each. Accumulated reserve balance was rupees 1 lakh. Ash Limited paid rupees 1,60,000 to acquire 70% interest in the company, in the subsidiary, and assets of Ash Limited were revalued on 1st January 20X1 and a revaluation loss of 20,000 was also ascertained. So now the book value of the shares of Ash Limited will be computed after considering the impact of revaluation profit and revaluation loss. So now here, as a holding company is holding 70% of the equity of subsidiary. Now 1 lakh 70% of 1 lakh is 70,000. So there is no doubt to it that we are having the equity capital of around 70,000 rupees in subsidiary company. Then what about the balance of profits of which I am holding the share? I am having 70% stake in the subsidiary. Now 70% of accumulated reserve of rupees 1 lakh, that is 70,000, will again be added to my book value in the books of subsidiary, as I am the holding company and I am having 70% stake in the subsidiary. There has been a revaluation and there has been a revaluation of assets of the subsidiary where there was a loss of rupees 20,000. Then I have to consider the loss of rupees 20,000 also in my books by my share. My share is 70%, so 14,000 will be reversal of the book value and 14,000 will be reduced from this value. That means 1,40,000 less 14,000, the value will come out to be 1,26,000. Now, if this revaluation loss would not have been there, but there would have been a revaluation profit, we are basically considering on the date of acquisition. Till the date of acquisition of shares in the subsidiary, there has been a revaluation profit. So in that case, the revaluation loss will not be reduced, but the revaluation profit will be added to calculate the book value of the shares of the holding company. So now, this is the same case where we are considering the revaluation profit. So minority interest, basically in any question of consolidation, there are 3-4 important aspects which are to be considered very carefully. Number one is minority interest, cost of control or capital reserve. Cost of control is to be calculated as the face value of the shares acquired and whatever the share in pre-acquisition profits or reserves of the subsidiary company, that has to be deducted. The total of the face value of the shares acquired and the share in pre-acquisition profits or reserves, that has to be deducted from the cost of investment, which that is a price which the holding company is paying for acquisition of those shares. So if the price is more, than the share in pre-acquisition profits and reserves plus the amount of nominal value of the shares which I am acquiring, then we will have the cost of control, that means goodwill. It will be shown as an intangible asset in the books of the holding company as a goodwill. And if the difference is negative, it means if I am paying less amount and the holding company is getting more in the form of share of pre-acquisition profit or reserves or share in nominal value of the shares, then there will be the capital reserve. So this is most important calculation in any of the consolidation question, and this will be shown as a proper working note. Then we have the concept of pre-acquisition profits
and post-acquisition
profits. What is pre-acquisition and what is post-acquisition? I think it's very clear that pre-acquisition is anything, any profit or losses in the books of the subsidiary before the date of acquisition. Before the date of acquisition of shares by holding company. In the chapter of consolidation, we are not supposed to work upon the acquisition of acquisition of interest in the subsidiary at different dates, or if the different reporting dates of holding in subsidiary are there, and the foreign subsidiary. So these are the exclusions. We are not supposed to do any problem on these particular subtopics. We are just to focus on the single subsidiary and the type of the problems which are given in the study material. The problem may involve the revaluation, profit or loss of the assets of the subsidiary. There may be issue of owner shares from pre or post acquisition shares. So whenever such concept is involved, we have to give the proper working notes, and wherever any information is lacking in the question, then we have to give the answer according to a reasonable assumption which we are taking by giving a due note of the assumption which we are considering in our answer. So this is the concept of pre-acquisition profit and post-acquisition profit, where the date of acquisition is very important to be considered, and any profits or losses before the date of acquisition of the interest of holding company in the subsidiary will be considered as a pre-acquisition, and the rest are considered as a post-acquisition. So what is the difference in treatment? What is the difference in treatment? Any pre-acquisition profits or losses will be considered for calculation of cost of control, or any share in profits or losses after the date of acquisition of interest in the subsidiary. That means post acquisition profit or losses will be added to the respective head of the consolidated company in the consolidated financial statements. If it is related to post acquisition profit, it will be added to the P&L account balance of the holding company, that is consolidated company. And in case it's a post-acquisition reserves, then it will be considered as a reserve, and it will be added to the general reserve or whatever head of the reserve it is. So this is regarding the profit or loss of the, and in certain cases this is regarding the profit or loss of subsidiary. What about the minority interest? In minority interest, as such, no need of division between pre and post acquisition profits has to be done. But while allocating the profits in pre and post acquisition, we can just simply write the share of the minority, and we can just simply calculate it along with the calculation for so now, revaluation of assets we have already discussed. Dividend received from subsidiary company, this is also one of the very important topic. If dividend has been received from subsidiary company and it relates to pre-acquisition period, it relates to the period before the holding company acquired interest in the subsidiary, then what will happen? It will have to be reduced from the cost of investment of the holding company. And if the amount of in dividend relates to the post-acquisition period, then definitely it will be considered as a revenue income, and it will be treated as a income in the statement of profit and loss as a revenue profit. So this is about treatment in case of post-acquisition dividend. We have already seen it that if under post-acquisition dividend, in the books of the holding company, it has to be accounted by crediting profit and loss account of the holding company because it's a revenue income. And in the books of subsidiary, it is not accounted. If it is not accounted by a subsidiary, then it is to be adjusted at the time of consolidation. Or if it has already been accounted by the subsidiary, then no further adjustment is required to be done. Then in case of treatment, in case of pre-acquisition dividend, we have already explained that in the case of pre-acquisition dividend, any dividend which has been pertaining to the holding company, that dividend will be considered as a capital income, and it will be considered for the calculation of cost of control of the holding company. Regarding minority interest, no differentiation has to be made, and whatever dividend pertains to the minority, that will be suitably provided to them. Regarding elimination of intra-group transactions, if any holding company has sold any goods at some profit to the subsidiary company during the year, then what has to be done? If holding company has sold to subsidiary company,
Then it will be
a downstream transaction, and if subsidiary company has sold something to holding company, then it will be a upstream transaction. Now what is the difference? Like if on the balance sheet date, on the reporting date, if any of the party to whom, either holding or subsidiary, you had sold the goods the goods are still remaining in the balance sheet of the company, they are still in the inventory, then we have to reverse the unrealized profit. There may be certain unrealized profit which is lying in the balance sheet, and then we have to write the entry for the reversal of the unrealized profit. If the goods are being sold from holding to subsidiary, in that case, what will happen? In that case, the entire amount of unrealized profit will have to be reversed. So, let us see this. In case of upstream transaction, that means the subsidiary has sold the goods to holding company, the entire amount of unrealized profit has to be eliminated. But from the holding company share, if the holding company share was 80% and the unrealized profit was suppose 1,000, then 800 rupees will be reduced from the consolidated profit and loss accounts balance, and 20%, that is 200, will be reduced from the minority interest. And from the inventory in the consolidated balance sheet, the entire 1,000 will be reduced. So from the asset side also you are reducing 1,000, and from the liability side also you are reducing 1,000. But if it's a reverse case, it means if it's a downstream transaction, then what will happen? If holding company might have sold certain goods to certain goods to subsidiary company, the entire portion of the unrealized profit has to be reduced from the holding company's share. It means from my consolidated profit and loss account balance, the entire amount of 1,000 has to be reduced by corresponding reduction from the value of inventory in the balance sheet. But this will be only to the extent of my share. This will be only to the extent of my share, and we have to see that the unrealized portion only has to be seen. If suppose certain goods have been sold out during the year, that will not be considered because that profit has been realized during the course of the year. So on the reporting date, that is not an unrealized profit. So now we will come to the queries. In consolidation, we did not ask any questions to them, but I think the concept is clear. So from examination point of view, we will like to advise you certain important information. As you know, you get 15 minutes reading time in the examination hall. So during that particular time of 15 minutes, you are advised to select the questions which you will be attempting, plus you can decide the priorities on the basis of which you will be attempting the questions. As you know that certain topics you are very comfortable with, and while seeing the questions in the question paper, you will be able to analyze that this question you will be definitely attempting, and all the steps you know, and you will be answering the question in complete sense. So first of all, you will be attempting that question. The question paper is a mix of analysis questions and the questions which are based on comprehension and knowledge. So, but in accounting, as question number 1 is mandatory question, we would advise you to attempt that question first, and the remaining question you can simultaneously decide upon which question to be attempted and which question to be left. And working notes, as we have already mentioned, that for each and every question, the working note is very important to be given. Sometimes we also make the errors in calculation, like in the calculation of cost of control or minority interest, or in the calculation of the revised values for the purpose of balance sheet. So these all calculations, for calculation of purchase consideration, we have to be very thorough, and we have to do all the calculations
Generally,
within
students
speed.
make a calculation mistake in the paper, so be careful while calculating anything. And sometimes they also make errors while forwarding the one figure to another page or one account to another. So be careful while forwarding your figures from one place to another or one page to another, one account to another. Prepare your balance sheet in the Schedule 3 format only. In the case of the companies, read
And
your
for
question.
banks, you have
For
to.
banks, you have to follow the bank format, and for the other partnership accounts or any other account, you have to prepare balance sheet in the T format only, and read the question paper which is provided you in the very carefully and thoroughly, and after that decide which question you will going to attempt first. After that, allocate your remaining time for your remaining questions so that you can complete your question paper, your solution within the stipulated time. You have 3 hours time, so you have to manage it accordingly. For completing your paper within the given time, you should practice in the examination criteria for which you can attempt the mock test
Mock test
paper.
papers are starting from 27 September. So you can attempt those questions either by, you can attempt those question papers either at your home by seeing on our website, or you can also
In
contact
case
the
your
branches.
branch is not conducted, so you can check the MTPs from the BoS knowledge portal.
Within
From where
48 hours of our uploading of the question papers, we will be uploading the answers, and you can compare your answers with those answers to evaluate where you are, and you can identify your weak areas so that you can work upon those specific areas where you need to brush upon your concepts more, you have to practice more. So basically, to attain confidence, you have to, as we have already explained to you, that you have to practice more and more questions to attain confidence, and then only you will be increasing your speed while attempting the questions in the examination. Try to keep 10 to 15 minutes at least for revision, last minute revision in the examination hall, because sometimes for doing certain adjustment we can make mistakes. So in the last, if we can revise and we can see that this particular item we were not able to give the correct treatment, and we just it just clicks to us that we have to rectify it, then we can make the adjustment accordingly if we have time. So first of all, you have to practice the question beforehand. You have to gain more and more confidence.
To gain any skill, you have to do lots of work, you have to do lots of practice. Only then you can complete your study and complete your revision, and with successfully you can clear this exam. In 2 days we try to cover all the important concepts of mostly chapters, so that it can will be helpful for your preparation and you can crack your exam, and it will helpful to polish your the concept. So I think we have successfully completed these 2 sessions.
And plus, if you have any query, and if you have not prepared for any chapter till now, and you are revising, you will revise in the next few days. If you have any query, you can write to us at accounting-inter@ica.in. We will suitably clarify your all doubts. You always believe in yourself. This is the most important crux.
Believe in yourself.
Believe
only
in
you
yourself.
can do your study, only you can crack your exam.
Yeah.
So don't lose your confidence, don't lose your hope. You can do everything, anything, but completing anything you have to do step by step. आज से शुरू करोगे तो कल तक पहुंचोगे. सक्सेस पाने के लिए मेहनत करनी पड़ेगी और वो आप कर सकते हो.
और आपके अंदर इतना, इनफैक्ट हम लोगों ने जो आपका देखा, जितने भी आंसर्स आपके आए, दे वर क्वाइट गुड, and we understood from the answers that you have really prepared for the chapters. You have already learned.
नागार्जुन, ये सभी बच्चे बहुत अच्छे से कर रहे हैं.
Yesterday also the feedback was quite positive. The students were replying our queries, and they were simultaneously moving with us. They were simultaneously working with us. So for the most important thing is belief in yourself.
Only your thoughts can make your future.
Yeah.
The thought today that you can make your future, you can be a CA soon, and we are waiting for your good result. And if any doubt, any problem, you can contact us, you can mail us. We are always there for you. BOS is only for you. BOS is for your success, and your success is always
our
success.
aim. Yes, your success is only our aim. We want all of you to succeed with flying colors, and you try to do the way we have tried to cover in our sessions that what type of answers we should give and what should be the way of answering the questions. You know the answer, you know everything, you know the concept, but you don't know the way of presenting the answers in the examination.
Small tips we have tried to give you during the entire session within 2 days. So be careful and always learn these tips. It will be very helpful for you.
And the amendments which we covered in yesterday's session, try to remember those amendments also. You are also advised to refer the RTP for the coming examination, because in that RTP we have also given the very good questions along with the amendments. So have faith in you, and you will definitely succeed with you will
Our
definitely
wish is
get success
always
flying
with
colors.
you. So be ready and crack your
Best of
exam.
luck for
Best of luck for your exam. We are always here with you. Thank you.
Thank you.
All the very best.